Have you ever entered a trade only to watch the market reverse against you? I know this is something very common to a lot of traders, and you are not alone. A lot of traders think it's just all about reading candlesticks. No, that is never the problem alone, but it's all about understanding where you are in the market wave. In this video, I'm going to be showing you how to understand and read the chart very well to know when price is probably running out of energy, and also when there is a higher probability chance of a reversal to happen. By the end of this video, you are never going to look at the charts the same way. Let's dive in.
So welcome to the price chart. So as a trader who wants to understand when price is about to end, catching reversals, it's all about understanding impulse and correction and how price moves. Because if you don't understand structures properly, you are going to, find it difficult to catch these reversals. And when you look at the chart, we're on the candlestick chart, and you need to understand that candlesticks create waves. All right, price is moving in waves. If I annotate on my chart, we are going to see that price is moving in waves. Okay, waves create structures, and these structures create trend. And I don't think there's any form of technical analysis that is going to help you understand this, if not wave analysis. Okay, so enough of these things I'm saying. It may be sounding too technical, but with time, if you follow this channel, you are going to be understanding what I mean and my system of trading bit by bit. Okay, so let's start with understanding what impulse is. Regardless, I'm going to do a video where I'm going to be talking about what impulse really is and what correction really is. Okay, so we see impulse as a fast and sharp wave. Okay, and correction as a slow and messy move. And corrections are minimum 3 waves. Correction is meant to take time, and you're going to see that on my charts here. Okay, for example, if this is an impulse can come in the form of a 3 wave, like I said, or maybe a 5 waves. Okay, but it's meant to be fast and sharp. But corrections are minimum 3 waves, and it takes time. Now, if you look at this example here, we're not trying to deviate. All right, our topic is reversal, but I want to take you guys step by step. And if you look at this point here, you could see this is an impulse here. You can see what I mean: correction, impulse, correction, impulse. And if you look at these corrections here, you can see that it's minimum 3 wave structures. All right, you can see that. Good. So now, understanding where you are in the price chart is very crucial and critical to understand turning points or when price is running out of energy. Okay. Now, if you look at this point, let's just use this scenario as an example. Let's say here now, and you're analyzing this wave because you're anticipating price to start pushing to the upside. Now, a lot of traders don't even know how am I going to know that price is about to turn here. Okay, with wave analysis, for example, I can easily, understand that because I can see that price has given me somewhat of a 5 wave structure here. Okay, now after that, all I simply need to do is, okay, I will anticipate price to give me what I call the first impulse of the next structure. You can see this impulse. So to catch that reversal, all I need to do is I will take my trend line to. A lot of traders use trend lines, in a different way. Some use it as a form of dynamic support and resistance, but I use it to identify the first impulse of price going to a certain direction. What do I mean by that? It means if you are pushing to the downside, this move here is the first impulse of this whole trend. So what I use my trend line to do is to identify the first impulse of the next structure. And how do I use it? Or, how will I use it to know? I've already picked my trend line. So what I will do is that I will connect my trend line between the last 2 impulses of the previous structure. Okay. Let me try to, expand my chart a bit so you can see that. Okay. Connect my trend line between the last 2 impulses. And if I connect my trend line, you could see that the last 2 impulses is actually this impulse here and this impulse here. Okay. Now, price has given me what? The last two what? Impulse, the last impulse, right? Sorry. The first impulse of the next structure. So what I need to do, because price doesn't move in a straight line. So what I need to do is I need to come down to my lower time frame and begin to analyze this wave to know when it's about to end. And that is the same way price move. You need to understand what we call, the fractal nature of the market. A very simple example to explain what I mean by the fractal nature of the market is, look at the concept of time. When we say, 10 years, a decade, we are trying to refer to time, but, in a much bigger degree. All right. If we say 5 years, we are trying to refer to time. Now, 5 years is smaller than 10 years, right? If we say a year, all right, we are trying to also refer to time, but smaller than 5 years. If we say 6 months, we are referring to time. If we say 1 month, we are referring to time. 1 week, a day, 4 hours, 5 minutes. It's all about the concept of time, but it's all about the degree. Whether this one is bigger, time frame, or a smaller time frame. So what it simply means that we are talking about time. So in the market as well, price moves with the same pattern regardless of time frame. So that is what we mean by fractal nature of the market. You can Google it, or maybe ask ChatGPT what is fractal nature of something. So it simply means something moving, in the same form but in different degrees. Okay. Now, moving on, if we look at that, you can see that this here is a corrective structure. Remember, I said corrective structure, impulse can be 1 wave, 3 waves, or 5 waves. I'm going to do this in a separate video. And corrections are minimum 3 waves, or it can be 5 waves. But corrections take time. And if you look at this here now, you will see that this took time than this move here. And this is looking more messy. Okay. It's a correction. So correction is not just, a lot of traders think maybe when they go uptrend, they begin to see something like it. But when you come to the chart, it looks different. Price doesn't move that way. Okay. Now, all I do is now I've analyzed this structure now and say, okay, if this is a corrective structure again, I want to maybe now go down to lower time frame and understand when this is about to end. So I can go down to a time frame like 15 minutes, but so I don't lose that area, I will just put a vertical so you guys will follow through. I'll put a vertical line there. Good. So now, if you look at that, what you understand is you can spot that 5 wave structure, which is giving you, now we have had an impulse here, okay, and price is expected to push up. Here we got the 5 wave structure. And how will I tell, again, aside from this being a structure, volume is one aspect again that is going to help me to understand that, okay, it seems energy is drying up to the downside. We are most likely going to resume that momentum to the upside again. And what happens when you look at this impulse now, the last two impulses, let me try to delete another one. Look at this. This is the last two impulses. You can see this impulse came in the form of a three-wave structure. Look at this. This is a correction. Oh. This is a correction. But remember what I said about fractal nature of the market and also degrees. You can see that this is very small compared to this. So they are not of the same degree, but you can see this and this, they are similar. Okay, they are of the same degree. So meaning from here to here is a correction. So if I want to maybe a label for those who understand wave analysis or Elliott wave, this is simply impulse correction, impulse correction, impulse. So this impulse just came in the form of a three-wave structure. But now moving on, how do I know that momentum is drying up in the market? Now, when you look at this impulse and this impulse, the last two impulses, you could see the MACD here. I use MACD for C. MACD simply stands for moving average, convergence, divergence. If you look at this MACD, you look at the lowest tick. In this scenario, price is moving down. If it's pushing up, we are looking at the green tick. So you look at the lowest tick, which is here inside, inside this impulse. And you will see that regardless that price is pushing down, volume is meant to be supporting this trend to the downside. But it's not happening. Rather, price is giving us a divergence. So you could see. So let's say we have a support here. Okay. Now, what happened, because I use a lot of some tools, but the other flow tools like volume profile and some of my statistical findings in the market to get my support and resistance levels. So regardless of what you use, so let's say you have a support here. So the same thing you did on the higher time frame which is 1 hour per se, which is the higher time frame, not necessarily the higher time frame, but the higher time frame in this case. Now, the same thing we did there. Now, on the lower time frame again, here we are on the 15 minutes. What you want to do, you want to also use your trend line to identify the first impulse of the next structure again, which is what the first impulse here. The first impulse is here. And how do you do that? You use your trend line, right? You can see, use your trend line and you mark. And what has happened here? Price has given you the first impulse of the next structure. So what do you wait for? This correction, and this is where you enter. And price begins to move. So this is how you can be able to understand reversal. So it's all about that form of top-down analysis, trying to start from the higher time frame and understand where you are exactly in the wave. Okay, because if price is going to turn on the higher time frame, it's going to start from even the 1 second chart. Okay, so this is how you can be easily you combine these two using MACD. You know how I've used trend line to show you, and also more importantly, understanding impulse and correction. And stay tuned, on this channel, because I'm going to be putting on a video to break down what impulse and correction really is. But a lot of traders think they really understand what an impulse is or what a correction is, but the actual truth is that they don't understand what impulse is. Or maybe if they understand them, but they don't understand what correction is. So I'm going to be opening your eyes, to see what will rather remain unseen for a lot of traders, in the market. So thank you very much for this video. And I know this video is helpful and going to be helpful to a lot of traders. So don't forget to like, share, subscribe to this channel if you have not. Share this video to a lot of traders, a lot of struggling traders out there. It's really going to help. Okay, thank you very much for your time and see you in my next video. Bye for now.